Hi, Ron Benning here with the Sacramento Fourplex Market Update for the period ending October of 2025. In this video, we'll look at key developing market trends and what the target break-even GRM is for a Sacramento Fourplex. These trends will help you understand where the market is and where it's likely to go over the next couple of months. There's no doubt that these are exciting times to be a fourplex buyer, so watch to the end to see what is likely to happen. October 2025 was a strong buyer's market for Sacramento fourplexes with 17.5 months supply of inventory. If you're looking for bargains, the Sacramento Fourplex Market is the place to be right now. During the last few months, around 75% of the fourplexes that have sold would have been a better than break even with 25% down on day one. If you're not already subscribed to my channel, please subscribe now so you can never miss an important update, including my new cash cow alerts, where every alert will have a property with a positive cash flow from day one. When it comes to inventory trends, active inventory is up 34.6% over last year at this time, with 9 more fourplexes on the market than there were at this time last year. But it's down just a pinch, 2.8% from last month. But with sold properties down 66.7% from last year and down 50% over last month, the growing month supply is putting some real pressure on sellers who want to sell to price realistically or to risk getting lost in the glut of inventory. To give you some perspective, the month supply of fourplexes is up 304% over last year at this time. When only 2 to 4 properties per month are selling and there are around 34 on the market, I expect increasing competition among sellers to attract the limited buyer pool. So how has that been affecting the buyer's bargaining power? The buyer's bargaining power increased by 1.1% from the last month. It is now sitting at 8%. This means that the buyers are buying fourplexes for 92% of the original asking price. The pending sale stayed flat at 4 pending sales this month. So there's a realistic expectation that sales may be a little bit higher than the 2 that closed into October, but they will be nowhere high enough to put any significant dent in the active inventory glut. Although the days on the market for sold fourplexes was down significantly last month, the small amount of sales skews the data a bit. And to be blunt, the average is lower because some of the newest listings priced realistically and sold quickly. But comparing the days on the market to last year at this time, the days on the market are up by 70.8%. Let's take a look at some of the average listing and sold price trends. As I've said many times in the past, the small sample size for fourplexes can skew statistics. But what I am seeing in the average list and sale prices comes as no surprise. Although the average list price was neutral last month, there's no denying an overall downward trend over the past year. And most recently, we've seen the average sale prices go up. And in fact, it just crossed the average list price for the first time in a long time. But the bottom line is that only a couple of properties at the top of the market sold last month, bringing the average up for that reason. For the past few months, mortgage rates have been the primary driver of the market, and they will continue to be the key driver, but maybe not in the way many of you are expecting. Mortgage rates trends, as I mentioned over the last couple of months, are down significantly from the beginning of the year. But most recently, despite a couple of Fed rate cuts, the drop in rates for mortgages has started to level off. In the most recent 30-day period, rates have fallen on average only 0.12 of a percentage point, or around 1/8 of a percent. I believe that is what led to the spike in pending sales a few months ago. But as I mentioned earlier, Pending and closed sale trends are now backing down a bit from where they were. It is my opinion, and I may turn out to be wrong, that most of the buyers who were on the fence about buying have already taken the plunge, and that those who are waiting for significantly better rates may end up being disappointed. The time to buy is now, in my opinion. Lower interest rates have to be balanced with keeping inflation in check. And in the most recent inflation numbers, we are seeing inflation inching back up to a 3% annual level. So, what that means to me, and again, this is just my opinion, is that rates will likely level off over the next 60 days and could actually even end up going up a little bit if the inflation rate continues to rise. Next, let's take a look at the break-even GRM. My lender quoted a client an investor loan at 6.5% with no points this last week, assuming 25% down on the average sale price of $1,118,000. The break-even GRM this month for a Sacramento Fourplex would be 12.17. Looking at the sold GRM report that is attached to the video, you can see that about 75% of the recent Fourplex sales sold with the GRM that would have been at the break-even or better from day one. We can also consider interest-only loans to improve cash flow while raising rents over time. So what's my short-term prediction for the Fourplex market in Sacramento? And where does this leave us heading into the holidays? I think there's a reasonable chance that rates will start to stabilize for a period of time. I believe that the pending and sold numbers will likely remain below average over the next month or two. So the big question is, how much new inventory will we see over the next 60 days? Based on the current buyer bargaining power, I could see demand picking up a little bit, but the buyers buying over the next couple of months are going to be looking for bargains. If rates go up, it will have a significant chilling effect on the fourplex market that is already very fragile, forcing prices down. If rates go down a little bit more, it may help a little bit with the glut of inventory, but I expect things to get worse for fourplex sellers before they get better. For buyers, this is the opportunity you've been waiting for. Like I stated earlier, 75% of the fourplexes that sold recently would have broken even or better from day one. I don't remember in the last few years any time when that percentage of sold properties would have broken even. Also, don't forget the 8% buyer bargaining power on average for the listings on the market. That means there's some real negotiability in a lot of these prices. So it's all about making offers and seeing which sellers want to sell the most. If you're not already receiving my GRM report, look in the description or scan the QR code on the screen to get started. If you're ready to roll up your sleeves and find yourself a good deal, call me and we can get to work. For prospective sellers, this may sound a bit disheartening, but if you simply price based on the income approach and with the GRM at or below that break-even threshold, you can still sell fairly quickly. The real problem has been that so few sellers are pricing based on cash flow. And although nobody knows for sure, there is a real possibility that prices will be coming down over the next 4 to 6 months if the month's supply doesn't go down significantly. If you've been trying to time the peak of the market before selling, there's a good chance that we're already there. To get an update on your property's value or to get an update on what's a fair rent amount for your property, look for the links down below in the description or scan the QR code on the screen. It also might be a good time to consider doing a 1031 exchange to reposition your money into other markets, other properties in better areas, or properties in better condition. See a link in the description for a video I just released on using a 1031 exchange in this way. Whether you're planning to buy or sell in the next 7 days or 7 months, give me a call or a text. I'd love to help you plan a smooth and profitable real estate transaction.